So, as I said, last week was very interesting. In last week's episode of Debo's Den, and if you haven't, please go on YouTube and watch the last episode. We actually talked about the difference between wealth and money, or even wealth and riches. And it got a lot of feedback. And we then decided in the research team of Debo's Den to take further looks at what wealth really is and how to actually create wealth. So just a small recap. Last week I said there are two different things. There is wealth and there is money. And that even though they're used interchangeably, they actually mean two different things. So on the one hand, I said that wealth is really like an engine that creates money. And on the other hand, money is a concept or a value or means of exchange. I then went on and talked further as to how, we really should chase wealth and not money. And I mentioned a few other things and all. So please, before I go on, I would ask, please go watch the last episode of Debo's Den, the difference between wealth and money. And so basically based on that today, we will talk more about wealth and how to create it. If you want to create wealth, the very first thing that you need to do is actually to think wealthy. And what does that actually mean? Thinking wealthy is a paradigm change, and it's a change of mind, a change of mindset, according to some people. I read and I was watching a video recently about a gentleman who said, in order to create wealth, you have to own assets. And so one of the things that he did was that he said, so as I said, last week was very interesting. In last week's episode of Debo's Den, and if you haven't, please go on YouTube and watch the last episode. We actually talked about the difference between wealth and money, or even wealth and riches. And it got a lot of feedback. And we then decided in the research team of Debo's Den to take further looks at what wealth really is and how to actually create wealth. So just a small recap. Last week I said there are two different things. There is wealth and there is money. And that even though they're used interchangeably, they actually mean two different things. So on the one hand, I said that wealth is really like an engine that creates money. And on the other hand, money is a concept or a value or means of exchange. I then went on and talked further as to how, we really should chase wealth and not money. And I mentioned a few other things and all. So please, before I go on, I would ask, please go watch the last episode of Debo's Den, the difference between wealth and money. And so basically based on that today, we will talk more about wealth and how to create it. If you want to create wealth, the very first thing that you need to do is actually to think wealthy. And what does that actually mean? Thinking wealthy is a paradigm change, and it's a change of mind, a change of mindset, according to some people. I read and I was watching a video recently about a gentleman who said, in order to create wealth, you have to own assets. And so one of the things that he did was that he said else, like he was creating wealth for himself, because not only is he buying things that he's going to spend money one-off and that's it, by buying one share in Apple or Levi's or Nike or whatever company it is, he has the opportunity to be a co-owner in that company. Again, remember last week's episode where I said if you want to create an engine of wealth, it is either you buy shares in companies that are already creating wealth, or you create your own company or your own business that is creating wealth or turns into an engine of money. So be like this guy. I love that concept. I love that idea. If you want to buy shoes or clothes or cars, buy shares in those companies and by extension begin to create wealth. Tip 1. And so this brings me to the second tip in terms of creating wealth. I started by saying that, your mindset is important. And so another thing that you need to do is to think of ways in which either you can buy assets in someone else's engine or create your own. Now, creating your own means starting a business. And when I say start a business, not necessarily you start and set up a legal entity. It's really more around the ability or the opportunity to sell something to people. So if you have the ability to sell, whether it's goods or services to people, people will do what? They will give you funds in exchange for the goods or services that you offer. So it's very important that as someone who wants to be wealthy, you actually either create services or you create a product. Now look, this goes to the general, and this is more Africa focused. So my brothers and sisters here in Africa, one of the challenges that we have is that we complain about a lot of things. And sometimes a lot of those things are justified. So I'm not here to preach or say that we shouldn't complain. But the reality is that one of the ways that people make money off Africans is by providing either goods or services that we're willing to consume. So companies in the United States send goods. We use our own hard-earned money, buy those things, and then they take that money and they ship it back to the US. Companies or companies in, in Japan, in China, in Germany, in the UK, or wherever, sell goods to us on the African continent, and we spend our money, buy those goods that they send to us, and then, they take our funds to their countries. And there's nothing wrong in that. The reality, though, is that we also need to begin to actually exchange goods and services for funds as well. So we as Africans need to do that. To do that, we need more and more people to develop products, to develop services that we can exchange value of or value from. So again, very second tip and very important. If you want to create wealth, it's important that you have a product that you are selling or a service that you are selling for which value can be exchanged. People will pay you for that product or service that you're selling. I had a discussion with a friend of mine recently, and he said that his own definition of success is where he's able to or make a living off the interest that he has on his capital. So meaning that he's not spending his capital. He believes that success, or the definition of success, is the ability for him to live his life off the monies that his capital is earning. So for example, where he has built a house, that's his capital. And then the money that he gets from the rent from that house is the interest from it. Or where he has fixed money or placed money in a current account or a mutual fund or whatever it is, and then the interest from that mutual fund or the interest from that bank investment or whatever it is actually gives him enough revenue for him to live a comfortable life. And that's his definition of what success is. And in reality, that really is what wealth is about, where the interest or the income from your investment are actually able to sustain your way of life or even help you to acquire assets or other assets. That's really very important, and that's actually the third tip, really. It's identify or know what your own definition of success is. You cannot be successful, or you can't know if you're successful if you haven't actually identified what your definition of success is. There's a friend of mine as well who said, and she was more about, her focus was more about philanthropy. And so she said, she gave away 10% of her income, and this was a way that she defined success. And then she then said, for the future, her hope is that she earns enough to be able to give away 20%, 30%, and even up to 90%. So meaning that she has enough income that just 10% of her income is enough for her. And that is her definition of success. So again, I would implore everyone, if you want to be wealthy, really think about it. What is wealth to you? What is your own definition of wealth? I hope that this sinks in and, let it simmer a bit, and I'll be right back. So one of the ways to actually create wealth, and a very important one at that, especially for people who say, hey, Debo, I don't have that much money and things like that. What should I do? How do I start creating my wealth? Well, it's very straightforward. You start by leveraging two things. Investing in, remember what I said, other people's engines, and then leveraging time. The engines that are usually the most popular in different countries are usually in public markets. So these public markets include the stock exchanges. So whether you're talking of the US, so you're talking of the New York Stock Exchange, the NASDAQ, or in Europe where you have the London Stock Exchange, or the German one, or the Danish one, or even the one other parts of Europe, you can basically invest little amounts, and there are many apps that even these days allow you to do that. Many apps that allow you to invest just little amounts in shares. So basically, if you are in, say, in an African country, say you're in South Africa, there are several apps that allow you to invest on the Johannesburg Stock Exchange with just, fractions. And so you can do fractional shares, especially when the shares are pricey. If it's in the Nigerian Stock Exchange, you can invest in companies that do different things, just pretty much based on what you do. Personally, and this is not an endorsement, I'm just sharing my own experience and what I have done. There was a time that I decided, okay, you know what, I was gonna get a house and build one. And one of the things that I did was to look at which of the construction companies are out there. And based on that, what materials do I even need for my house? It became obvious to me that cement was one of the most important things in construction. And so what did I do? I first of all went and I purchased shares. This particular house was in Nigeria, and I purchased shares in two of the biggest cement companies in Nigeria. Now, this is my own action plan, or this was my own approach. But basically, you can go and buy shares in any company in most countries around the world. So if you want to create wealth, one of the first things you can do is to buy shares. And for a start, I usually recommend, buying shares in companies that have relative balance between risk and return, which typically is shares in companies listed or quoted on the various stock exchanges around Africa or around the world. So allow me to take you back a little bit. Prior to now, money was a means of exchange. And then to create wealth, people then started investing in stocks or shares of different companies. These companies that they invested in usually were listed companies and companies that had stable returns and things like that. Over time, people then said, hey, look, instead of investing and having stable returns in companies that are listed on the stock exchange, what if I can look for companies that are about to be listed on exchanges? That way, I actually get even more value. So essentially, a way to invest in private companies before they go public. These ladies and gentlemen actually led to what I would say the venture capital industry, where essentially people now started investing in companies whilst they were private before they even go public. Over time, people then started investing in companies that's even more recently started investing in companies that have the potential to go public. And so venture capital companies started investing in companies that had the potential to grow big or to scale or to go public. That led to what we call the private equity market. So first of all, the private equity investors started investing in companies that had the potential to go public. Maybe the companies that had already established, they were having steady revenues and they had not yet gone public. So private equity investors would invest in those companies before they go public. By extension, you then had a set of people who are kind of also private equity investors, but they take more risks by investing in ventures that maybe have not yet been fully shaped. That is what I just said about venture capital. So essentially, capital or investments by investors who are investing in ventures before those ventures have become fully formed or fully shaped. So venture capital. Now, these companies are higher risk companies. But the thing is, there is an opportunity to make lots and lots and lots and lots of money, again, depending on one's risk threshold. The reality is that if you invest in startups or those new engines, some of those engines may not survive, right? However, there's a likelihood that some of those engines survive and it kind of like hits the ball out of the park. Let me give you an African example. Recently, Flutterwave got, just a few days ago, received some investment of about $250 million. And that investment of $250 million valued that company at $3 billion. Now remember this, Flutterwave is less than 7 years old. So this company that was started less than 7 years ago has grown, and within a span of 7 years is now valued, it's a Nigerian company, and it's now valued at $3 billion, which is bigger than the two biggest banks in the Nigerian exchange combined. So today in the Nigerian exchange, the biggest banks are Guarantee Trust Bank and Zenith Bank. Zenith Bank has, I believe, a valuation of $1.6 billion, and Guarantee Trust Bank has a valuation of about $1.5 billion. Both banks combined have a valuation of about $3.1 billion. Just a few days ago, Flutterwave essentially came off with a valuation of $3 billion. So essentially, that startup that started, just a few years ago is now worth the combined value of some of the biggest banks in the Nigerian market. But for me personally, I like to look at Flutterwave and then think, who are the people that invested in Flutterwave 7 years ago? Now, those are the people that have really, really created wealth and made a killing. And so essentially, I say for most people, if you're listening to this today, dedicate a portion of your investments or your savings to investing in stable things, particularly on the stock markets and stock exchange, especially if you just have limited funds, and put some, if possible, in startups, because you never know where those startups will go or what they can be. So I implore people, support startups and create wealth by supporting startups. So I'd like to harp on this particular topic about supporting and investing in startups as a way of creating wealth. This is very important because this is one of the ways that I have created wealth for myself and my family, and that lots of people have been approaching me in creating wealth. There are lots of startups out there with lots of ideas. Again, remember what I said, in creating wealth, it's about creating products or services that people want. And so these startups that want to create products or services require people to actually invest in them. They usually would raise money from friends and family, and with platforms like Get Funded Africa that actually enables them to even reach a wider audience or a wider community, they're able to raise funds and scale even faster. One of the companies that we that I did an angel investment in a few years ago is now, as at the time we did the investment, that company in total was worth equivalent of $100,000. This was about 3 years ago. So I invested in that company, and that company was worth $100,000. Fast forward 3 years, that same company that I invested in worth $100,000 is today worth $5 million. And so the value of my investment in that company has grown astronomically. And so I could decide to sell my shares in that company or sell off to another investor, or hold it and continue to see how that company will continue to grow. So again, if you want to create wealth, put some of your assets in riskier versions, such as investing in startups. It's a way to have unimaginable amounts or increases in wealth. Investing in the stock market can give you fantastic returns. 10%, 20%, 30, 40, 50, 60, maybe even 70% or more. However, investing in startups sometimes can give you 100%, 1,000%, even 10,000%. The problem though is that you don't know which ones will actually succeed or not. So in such situations, it's best invest in startups, but spread your investments and spread your risks. So there you have it. It's all about creating wealth and knowing how to create wealth. So if you're going to do anything, please remember, please remember, it's important for you to take what you earn, find a way to earn something, whether it's by buying or selling products, or even if you work in a company, you earn a salary, take some of that amount and actually invest in your future. Don't just consume everything. Do not consume everything. There will always be bills to pay. School fees, clothes, and things like that, rent. There are always bills to pay. But if all you're doing is paying bills and then maybe buying certain things for yourself just to satisfy your feeling, what happens is that you are in a rat race. And that's going to continue over and over and over again, whereby you're literally chasing your own tail. So please, as I said, look for ways to save or look for ways to invest small amounts. It doesn't even matter what that amount is, as long as you begin that journey of saving or investing in things that create value and can create returns for you. So wishing you all the very, very best on your wealth journey. Remember to visit our website, getfundedafrica.com. We've got fantastic opportunities for you to enable your businesses or even enable your business ideas, whatever it is that you really want to do. Don't forget also to subscribe to Debo's Den on YouTube and also hit the notification button such that when new editions of Debo's Den comes out, you'll be notified. Thank you. Have a great week ahead.